Welcome to INA Insights, where prominent leaders and influencers shaping the industrial and industrial technology sector discuss topics that are critical for executives, boards, and investors. INA Insights is brought to you by INA.ai, a firm focused on working with industrial companies to make them unrivaled segment of one leaders. To learn more about INA.ai, please visit our website at www.ina.ai.
Hey folks, welcome to our next episode of INA Insights podcast series, where, as you know, we visit with leading executives in the corporate investment world to explore a wide array of topics, including macroeconomy, business strategy, technology, operational transformations, and as importantly, their outlooks in the future. Today, I'm really excited to welcome Mr. Ameya Prabhu, Managing Director of NAFA Capital Advisors based in Mumbai, India. NAFA Capital Advisors is an India-focused integrated financial services platform with activities in investment management and corporate advisory. Their asset management businesses include a private equity fund, public equities, and debt market investment management, while the wealth management business is a one-stop shop for financial products, including direct equity and debt products for retail investors. Ameya is also the founder and managing partner of UAP Advisors and has been designated the Young Global Leader by the World Economic Forum. He's a writer and author of the highly entertaining The Rock Barbers and Other Stories, a book of short stories published and distributed by Amazon. He's also a trustee of Manav Sadhan Vikas Sanstha, an NGO focused on holistic human development. Ameya, welcome to our podcast. We're super excited to have you and are looking forward to discussing your book, NAFA, and your journey with us today.
Thank you. Thank you so much, Gaurav. And it's such a pleasure being here. Thank you for having me. And it's an honor. Thank you.
Awesome. So, Ameya, let's start off a little bit with the NAFA story. Could you start by telling us a little bit about NAFA Capital? What's your overall vision? What's the strategy? And how are you trying to differentiate yourself in the investment management industry?
Sure. So, we actually started off NAFA. I mean, the name was different. NAFA actually in Hindi means profit. So the idea was that, ultimately all of us are in business and in investments for profit. So that's why we decided to call it NAFA. And I wanted a Indian name, like Indian sounding name, and hence the branding. Actually, in a previous avatar, initially was called Duisburg Boston Financial Services, which became DBFS. And then I integrated it all under NAFA as one brand, which we are building up. It's a long way to go. But I started with investment banking. Then we got into public equities management, then entered private assets management. And so today we do all four. We have public equities, private equity, investment banking, and we also have an investment in a lending business, which does rural lending, and all of it focused on India. We have, of course, diversified as well. So we are also in the sustainable agri-input space, wherein we have a joint venture with IFFCO, which is the largest agro-cooperative in Asia, one of the largest farmers cooperatives in the world. And we do sustainable inputs distribution currently, basically nano urea, which replaces a 50 kg bag of urea with a 500 ml bottle of urea. We also have a product which we distribute called Sagarika, which is a seaweed-based biostimulant, which completely eliminates chemical fertilizer. And we also would be manufacturing that in the future as we grow. So financial services and agri are the true pillars, I would say, of the organization. And we are also, and again, a lot of it is India focused. Now with the agri business, we have a bit in Nepal as well, but growing. I think the idea, of course, India being a large growing economy, we see a good future here. But I think as any smart investment manager would say, it's important to diversify your risk. So I think that's what we are also focused on now, is to grow a bit globally.
And that's great to hear, May. And I think in particular, as I was getting myself more educated about NAFA, I think your composition sounds pretty interesting. You've been talked about agriculture as well as you talked about financial services. And I believe you also have a healthcare fund in the portfolio. So could you speak a little bit about how you think about that portfolio makeup? You talked about diversification, but what are the trends, or what is your thesis as you bring these multiple different investment approaches together?
So, I think I mean, I would call us old school investors. We invest in businesses which have a high ROE and are profitable. So I've never been, I always joke around that I believe that I'm a very old school guy. You have revenue, you have cost, and there has to be a profit in between. You can so all loss funding businesses forever, selling and hoping to get market share. And I've never been one of those people. So even when we invest, I've always been someone who's invested in companies which are either profitable or have a pathway towards profitability, or whether we believe that the entrepreneurs can get towards that. So I would say we are conservative investors. We are growth focused investors in terms of what we do. I also like to do things with a slight difference. So I mean, in the agri space, of course, and sorry, in ag we don't have a fund. It's our own business. We have been investing in from our balance sheet. And but in on the health side, again, actually we don't have a fund. We again invest either from our balance sheet or along with investors. So we pool in health investments. But I think a lot of it, what we try to do as well, I wouldn't say all of it, but increasingly larger proportions of it is where we can make a difference. I mean, I know it sounds cliched or we want to make a difference, but I think capital is something is has a very strong power. And if a capital can choose to allocate itself in a certain way, you can really make meaningful differences, right? Because ultimately, I mean, if you think of it, today all of us are users of technology. I mean, we don't even I mean, there's immense computing power in a phone. And I still remember, I'm 36 now. When I was younger, I mean, having a computer was a luxury, especially when I was 8 9 years old. And in the last 20 30 odd years, I mean, less than that, 25 years, you've moved on from being able to have an incredible amount of computing power in the smallest devices. So why has that happened? It's demand, of course, it's technological evolution, but all of it funded by capital. And even if you've seen I mean, we don't invest in life sciences, but if you see the life sciences space, what's happening in terms of innovations to treat a wide variety of diseases. I mean, you would have never imagined that would exist. One of my aunts recently had an organ transplant, and she's doing very well, touch wood. But I think that was unimaginable maybe 30, 40 years ago, right? In terms of what. So I think so our approach is three-pronged, I would say. Number one is uh, we are um, uh, we are traditional conservative investors. By that I mean we are not averse to risk, but we are averse to blind risk, and we're also focused on businesses which can be profitable with time. And I think the current downturn teaches you that it's all well and good to invest in high growth businesses, but when you have to land, you need to land on profitable cash flow generating businesses. So that's one theme. Number two is we try to invest in things that are done differently. And I think bring in our managerial expertise, our knowledge, our focus on profitability. I mean, similar to what Funway does in a way, but on a much smaller scale, of course. But again, that's the second thing. And number three is give differentiated investment options to our investors, because we are much smaller than some of the larger firms or the larger funds that are there in the world. But I think we are nimbler, we are more active. We recently did a transaction in the real estate space wherein most people probably wouldn't have touched it, but we did it because, again, I have a firm believer in that if a business is a good business, it also has to be a well priced business. So a great company that's expensive for me is not as good a proposition as an okay company which is cheap, which can grow, right? So and the public markets affords you such mispriced opportunities. And I think that's another strong belief that I have, is the price at which you buy is very important. And I think that, again, I know it sounds cliched, but I think that's something which a lot of people tend to forget, that in this herd mentality, people want to go and buy whatever is cool, what everyone, the whole market is buying. But by definition, that would actually mean it's quite expensive.
No, I mean, those words ring very true. I think being simple about your investment thesis, and as importantly, being consistent about it in all
Yeah.
cycles is helpful. So thanks a lot for sharing that. Oh, Ameya, one thread I wanted to pull, as you talked about NAFA. How active are you in your portfolio? What's your approach to like supporting the entrepreneur or supporting your portfolio companies? How do you think about that?
So I don't run the funds myself. So we have a team. I mean, we have a CIO who runs the public equities. We have a team who runs the private business part of it. We have a CEO for the iBanking. And I actually focus myself primarily on the strategy, new businesses, HR, compliance, and of course, MIS, because I think that's a very important part of it. So I think the public equities, by definition, I would say we are not so active in terms of being. What I meant is we don't churn the portfolio that much, so we probably would churn it 7-8 times a year at most. So we aren't a high churn portfolio. When we believe in a stock, we stick with it. And but again, by definition, on the public equity side, our interaction with promoters, or as we call entrepreneurs, as you call them, is lesser. On the private side, actually, we are very active. We work with them. We help them grow their business. Even though we are minority shareholders, I mean, we would own anywhere between for 5 to 15% of a company. I think that we actually roll up our sleeves in many and really help the company grow, troubleshoot, even raise money. In certain cases, we've actually raised follow-on rounds for companies and really support them, through also regulatory risks, etc. And again, but on the iBanking side, I think again we work very closely with the promoters in businesses. But currently, I do spend a decent amount of my time on the agri business as well, which we are going and growing, because I would say one of my personal expertise lies in building something from scratch. I think. And I think that's what I enjoy. That's what I've done. And so, and after it reaches a certain stage, I professionalize the management, bring the teams on board, and of course, then take a different role. So I think it's also very important to learn how to let go. You can't. And I think the only way to grow is by letting go and trusting people who can take it to the next level. And I think it's very critical to do that. And I think I think American football teaches you that, right? Different people for different roles. And I think if the quarterback wants to be the guy, sorry, my knowledge of American football isn't great, but I meant the guy who runs with and collects the ball. I think everyone has its own role. I mean, similarly in football, I mean, a striker cannot be a defender, but if he tries, he may not be the best defender. So I think it's important to have roles and focus on them.
Oh, makes a ton of sense. Makes a ton of sense. So, May I switching a little bit to away from NAFA and into the ecosystem you operate in? Obviously, these days there's a fair bit of concern about the outlook for the economy. At least here in the Western Hemisphere, there's a lot of concern about high interest rates, softening demand, high inflation. What is your take in terms of what's happening on the ground in India? What is your outlook, and how does that impact your thesis, investment thesis, or with your own businesses?
I think one advantage of being in India is that the outlook here is far more positive. I mean, if you see, I mean, I had dinner with some people from the UK yesterday, and they were literally talking doom and gloom, in terms of the problems, the issues that Europe is facing, and primarily the UK is facing in the post-Brexit environment. So the atmosphere in India isn't as gloomy, and I do hope that I know this will play out a few months from now. So I do hope that it remains the same. But I do think that the outlook here isn't as gloomy. I think, but of course, I also think that the world is slightly less dependent upon the Western world than it was earlier. I wouldn't say it's completely decoupled yet, but it's not that America sneezes and we catch a cold fully. I mean, it's still we America sneezes and we do fall sick, but we don't catch a massive cold. If that makes sense. So I think so our domestic demand is strong. I think that's one good thing. Number two is the softening of commodity prices has definitely helped, because we do import a lot of oil and metal, so that's a positive. Now, I would say the challenges in India lie in job creation. I mean, we are now the largest population in the world, so creation of X number of jobs becomes tricky, especially with AI and technology coming in, and actually the number of jobs reducing globally in terms of the requirement of human interface. And number two is, again, it starts off with what we started this conversation with on the tech companies have. I mean, we do have the tech slowdown here as well, and that's primarily because they can't keep raising multiple rounds of capital, and hence businesses that aren't profitable, that cannot sustain themselves through internal cash flows and accruals, are ultimately retrenching. And when retrenchments happen, where do these people go? So that's definitely one challenge that we are looking at. So I think the challenges for India are job creation, because that's a big challenge. Now, the second challenge which we are going to face is while our physical infrastructure is really improved, but sometimes given the fact that we are a democracy, and I'm very proud of the fact that we are a democracy, but that what that means is, unlike a China, we can't go and build wanton amounts of infrastructure. We have to go through due process, so that takes time. So as a byproduct, sometimes by the time your infrastructure is up and running, the demand has already crossed that. So again, you need to go to the next stage. So that's definitely a challenge we face, though I think infrastructure here is a lot better than many countries in the world, certainly better than most parts of the US today. I would say in terms of our roads, airports, the investment we are putting in the rail infrastructure, the ports. So that's one good thing. But I think job creation for me is the single biggest challenge that India is going to face in the years going forward.
Got it. No, very insightful and interesting to see the comparison or the contrast to what at least what we are seeing here in the US, and good to have at least a glimmer of hope there. I want to switch over to a little bit of one of my favorite topics for this discussion, your book, The Rock Barbers and Other Short Stories. So could you talk a little bit about what the objective behind writing the book was? What was your vision? What were you trying to convey? I think because it's a very interesting format you chose, and I'd love to just understand what was the underlying objective or vision you had behind it.
Sure. No, I think there are a few questions there, so we'll answer them one by one. So I've been a writer for a long time, maybe 20 plus years, and I've been writing in school. I was writing in college. I actually even dabbled with the idea of becoming a screenwriter, or a script writer, sorry, at a point in time. But then I got into economics and studied economics, finance, and then got into business. But I've written for the HuffPost. I've written for Quint. I was and satire, mix of fiction, some stuff. So I've been writing for a long time, but I always felt that there was, I wanted to write a book. But the single biggest challenge I had was time, because I was very busy with business, with work. And so I think, someone asked me that, what is the trick to writing? So I said, writing is 20% talent, 80% discipline. So what you really need is to sit down in a place, focus, and write. And again, that's something that it's very difficult for all of us to do. But when I was stuck at home during COVID, I suddenly had the luxury of something that I didn't have for a long time, which was time. So I began writing, and I actually finished the book in about 3 months. And and the format, actually I chose it because I think, again, it's I think we're all very busy in today's world. And to read a novel, I mean, I also end up half reading a novel and then I pick it up a few months later. I think that even on Netflix or on any of the streaming platforms, I really half watch a series, or not even half sometimes, and then I pick it up a lot later. So my idea was to write short stories which can actually be read on a 3-hour flight or on a 2-hour flight. You can, and then you maybe pick up the book a few months later and read the next story. So while they might seem condensed versions of what think of it as the TikTok or of books. You know what I mean? Like, instead of having a large format movie, you have a short reel. So of course, not as short as a reel. I mean, the book actually, if in some total, the book actually is a novel length book. It's almost 300 pages as a book. But each story is also about, I mean, there are 9 stories, so about 28 to, I think, 40 pages per story, or 35, I think, is the largest per story. But the idea, the format was actually chosen for people to be able to read and then read the next story again. And to be honest, publishers don't like short stories. So when I pitched it to them, they actually, Amazon actually published it initially. And there's a subsidiary in India called Westland. And they said the same thing to me. Why short stories? Nobody. So my retort was exactly this. I said, listen, the world is changing. And they actually they liked my pitch. So I think I was quite happy with that.
Super. No, absolutely. That's a very interesting way to think about and making it more contemporary in today's TikTok world. So, any pearls of wisdom, any takeaways you which are close to your heart as you think about either our personal lives or business lives from the book, which you want people to take away?
The book actually focuses on, if you ask me, at the core of it, it focuses on journeys. And what I mean by that is not a physical journey, but the journey of the soul, of the person, of the soul. And like, there are, in Hindu religion, we talk about reincarnation. And I actually, one of the stories, I actually said that the character, I mean, says that we don't know what happens after death, but actually reincarnation actually happens many times in the same life. Like, for example, what I mean by that is all of us, when as we go through life, we wear different roles. We are children, we are then school going kids, we are then young adults, then we go to work, then we become husbands or wives, then we become parents. So each time a new thing starts. I mean, even in, say, my father was a banker who got into politics. So when he was, so each time you get a new, let's say, era or a new period in your life starts, the old period goes away. So, and we can even do the same as personalities. I mean, there are we all have flaws. We have anger, we have other flaws which people have. So again, when we shed a flaw and we move on to the next level, that's also us evolving, that's also us reincarnating as something else. So I think there are many lessons, and actually to be honest, the book was meant to be a book of metaphors and lessons for people to read through. And this was, for example, one of them. But and essentially they're journeys of each person, of each soul. Like, I'll give you the main, the not the main, but the first story in the book is called The Accidental Philanthropist. It's about a Japanese, very successful Japanese businessman, a billionaire, Takahashi Watanabe, who is very rich but not very loved. But he is extremely successful, but not in financially, or as a businessman, but not someone who people would want to have a drink with in the evening. So estranged from his daughter, not very liked at work, but people fear him. People want, so as he's turning 75, he does a regular health checkup. 75, of course, in Japan is basically you're a teenager. But, he's doing a regular health checkup, and the doctor comes and says, Takahashi-san, I'm very sorry to tell you, but you've been detected with a terminal disease and you won't live for more than a few months. So then he decides to throw, of course, he's shocked, and he decides to throw this 75th birthday party, and he's estranged from his daughter. So he asks her to also come, and she reluctantly attends. And of course, everyone's there, right? The who's who of Japanese industry. There's the prime minister, there's people. And he sees his daughter there. And at this event, he suddenly announces that he's going to give his entire fortune away to charity. And now suddenly the guy becomes popular. Like, his daughter comes running and hugs him. He reconnects. He's like the Time Man of the Year equivalent of Japan. He spends time with his granddaughter, becomes like a TikTok star. He's on the front page of everything. And for the first time, and he changes as a person, he evolves. He's no longer that grumpy old miserly billionaire. He's suddenly this loving, cool, chilled guy who's helping people. And suddenly, for the first time in his life, not only is he wealthy, but he's also loved. And it's something very new for him to digest. And everything's great, everything's moving well. He's starting the process of giving up his endowment, or giving his endowment. And 3 months later, the doctor comes to him again and says, Takashi-san, I am so sorry. I mixed up the reports, but now you're really healthy and you're going to live to be 100. And that's when the guy is shocked, and of course he gets angry at the doctor. But he has a dilemma that he really wants his money. He's really attached to his money, his material wealth. But at the same time, suddenly he's like connected with his daughter, spending time with his granddaughter. Suddenly he's loved. So what does he choose, right? I mean, the rest of the book, the story rather, deals with the choices that he makes. And hence he's the accidental philanthropist, not meaning to be a philanthropist, but, and of course, I won't tell you how the story ends, but it's so, and these are the stories, right? They deal with the dilemmas of life. They deal with the questions that life possesses, and in a way, the journeys of each character through the trials and tribulations, and how they eventually emerge.
Very intriguing, and I'm hoping that teaser encourages a bunch of our listeners to pick up the book. At least I found it very, very entertaining. So thanks a ton for that. So Ameya, as we come to a little bit of the close of this discussion, wanted to ask you one question. I know the whole startup world, entrepreneurship is in many cases very enamoring. You've been a successful founder on your own, and of course now with NAFA Capital. Can you reflect on your startup journey for our audience? What are some of the counterintuitive things you kind of learned? What are the big learnings you would want to impart to other people who are trying to get on the same kind of journey?
Sure. So the interesting thing is, I graduated back in 2008. I did a master's in finance. I did my undergrad in economics in England, master's in finance from a business school in Spain. And I wanted to always go back to B school for an MBA in the US, which I never ended up doing because of work. But when I started out, the interesting thing is, so we were finance graduates in September 2008, or actually we graduated by the time into December 2008. So half of our class had jobs from firms that didn't exist. I mean, it's very easy for, I mean, it's normal for your job to be rescinded. It's, it's normal for people to delay, but we had jobs from banks and firms that didn't exist by the times we graduated, be it a Bear Stearns or a Lehman, or, or in Spain, there were a lot of banks which fell. So I came back, did a couple of internships for a while. Never took up a job. Looking back, probably a mistake. Should have worked in another organization. But then I started my own renewable energy startup, a firm to develop renewable energy projects back in 2009. I raised money. At the age of 24, I had about 45, 50 people working for me. And by the age of 25 and a half, I had to shut it all down because my investors pulled out. And at the time, I had to fire all these people. I was, it was very difficult for me. And at the time, I thought it was the most difficult thing in the world. And why has it happened to me? But honestly, I learned so much from that. I mean, looking back, of course, we lost money. I lost investors' money, and they were very kind in terms of understanding that that's what the case. But I mean, I think I learned a lot. I think the focus that I have on profitability, the focus that I have on cost control, not going and hiring all these people, having this big fancy office, it really served me well. Those lessons, I was only 25 and a half by the time I learned them. Probably learned more than any business school that I could. Probably should have gone to business school at that stage, but the entrepreneur in me was so hurt, that ego was so hurt that how could I fail, so then I said, no, I need to go back, and build something again. So that drive helped, but again, looking back, probably should have gone to business school at the time and, taken, so I think ego is never great. I think that's a great learning for me. Number 3 is, I don't think any failure is the end. I think actually, either you grow a business or you learn from a business. Actually, one of the things I love to do now is to hire people who have actually, failed in businesses, so to say. And I think that's something that we definitely want to look at and consider, because I think there's nothing called failure. You always learn from every instance. I think it depends upon how you approach it. That's number 3. And number 4, I think, is I think it's very important to be gritty. I think, I mean, as long as you don't do fraud, as long as you are true to yourself, as long as you can, you are sticking on an honest path, the rest is, it's risk. At the end of the day, life by definition is risky. Whenever, every day when you leave the house, or even in the house, you could slip in the shower, so life is risky. So we can't, manage risk, reduce risk, but at the same time, don't be scared to take risk, build, but take good risk. Don't go and build loss-making businesses without a focus on profitability. But that doesn't mean don't build businesses. So I think the key is, according, if I have, as you said, some advice, I think the key is know what you're doing, be honest, be faithful to yourself, most importantly, and ultimately, be ready to take risk, because I think life, risk is the reason why we sent a man to the moon. Risk is the reason why we discovered the wheel. Risk is the reason why, all of you left McKinsey and built Fernway and doing such a great job with it. I think it's, and that's what drives humanity forward. So I think it's something that we quantify it, manage it, but don't be scared. I think that's the one thing which I would say.
And that's really sage advice. And on that note, I would like to thank you for your time, Ameya. This was incredibly insightful and highly entertaining discussion. I'm hoping my listeners and viewers also will feel the same way. So thank you so much for your time and thoughts.
Thank you, Gaurav, and thank you to the entire team. I didn't even realize how time flew by. So really enjoyed it.
I agree. But again, it speaks volumes for your experience and your perspective. So thanks a lot, Ameya.
Thank you so much.
Right. Take care.
Thanks for listening to INA Insights. Please visit ina.ai for more podcasts, publications, and events on developments shaping the industrial and industrial technology sector.